Thank you for tuning in to another edition of the Vulcan Report. This report will be for trading on Tuesday, November the 19th. Looking at the S&P 500 futures contract, as you can see, we now have a black candle here, just like we did back on October the 30th. And as you can see from October the 30th, what happened was the market started to correct. We pulled back, excuse me, took out the support, and then moved sideways a little bit, and then we pulled back even more. Now, this was at a new contract high. Once again, here we are in a new contract high. Let's go back further. On September 27th, we got the warning and we pulled back sharply. Prior to that, we got the warning, but we exploded higher first, then we corrected. Going back even further, we got the warning on August the 19th and August the 21st. Market based out, pulled back a little bit, took out support just by a hair, and then pulled back. Prior to that, got a warning August the 6th, pulled back sharply. So, as you can see, the precedence is there when we get these warning bars, okay? Warning that a top is in or is near, and it's preparing you for correction, okay? That's what that's about. So we have to keep our alert hats on. It just seems like this is a market that just does not want to die, though, as of late. Excuse me. So we still have to be cautious. We do have bullish momentum locked in, so we do have to be mindful of that. There's no bearish momentum being locked in yet. Last time we tried was here on November the 5th, but we got very little follow through. We did take out support, but like I said, we came right back. The best time to see this correction is under bearish momentum, like we had on September the 27th. See, we're bearish here. Okay, we're bearish. Boom. The selling pressure was locked in at this point. Seems like whenever we get the warning bar on the when the bullishness is locked in, it doesn't necessarily pull back right away. But if we get it like here, at the end of the bull cycle, that's when we get the correction that follows. So we need now to see if we're going to come off of this cycle. Alright, that was my daughter that burst into the room. She's playing hide and seek with her brother. Okay, so where was I? Yeah, so we need to see if on Tuesday we will come off of this. If we come off of this on Tuesday, if we fail to lock in the bullish buying pressure here, then we know that the correction will be at hand. Okay, so that's something we're going to have to watch for on Tuesday. Alright, so trading for Tuesday. Long at 17.92 and a quarter, short at 17.84 even. Alright. Okay, let's take a look at the Russell. It's the Russell 2000 futures contract. A little bit different here in the Russell. As you can see, we hit a high here of 1121. Let's see here, 1123. All right, so we topped out on October 30th at 1123. Let's see what we did on Monday. We hit 1119, so that's a failed double top now. And you have a warning bar here, okay? Alright, that is a failed move here because it did not take it out. It did not take out that 1123 high, so we have to take note of that. We don't have a choice. We have to take note of that. That is a big deal. Alright, now you see the last time we got the warning in the Russell was on October the 21st, and we still had the bull momentum locked in, so we had to wait until we lose the lock, which we lost it on the 29th, the close of the 29th, which was our confirmation that the top was now in. So what happened? The following day, we spiked at a new high. It didn't close there, so that's a spike. And then the market sold off almost immediately after hitting that new high. Okay? So that's what happened there in the Russell, and you can see the correction was as so. Alright? So I think the Russell is leading the market at this point in the correction mode. Alright, you see the last warning bar here. It warned that the bottom was now in here. Okay? And we corrected. And it did it under the bearish momentum. Okay? The warning bars are no joke. They really do try to give you a heads up of what's happening. And here you have another one. Another warning bar. What happens? It's locked in on the bull side, so we exploded higher. Alright? Once again, warning bar, but it's on the bear side. So what do? We put in a bottom. Following day bottom, we roll up. Okay? Come back and build support, and we explode. Here we go. Warning. The momentum came off. What happens? Market goes down. Here we have it here. Warning that the top is in or near. Second warning. Next day we come off. Move a little sideways here. We take out this support though. Market wants to explode higher. Next warning. Next day we come off. And then that's when we lead over here to this. Okay? So we go from here to this. Alright, so here we are. We have to keep note of this. We have to watch it. Because when we get these signals, it usually means something big is coming, okay? So, if we're going to trade the Russell futures, for Tuesday, we have long at 11.11 and a quarter, short at 11.01 and 3/4, and that's for the Russell futures. Alright, here we are looking now at the crude oil. Looks like the market's trying to form a base so that it can start to do some retracement. I would say that we are still locked in on the bear side. Okay. If we were to retrace from this point, the bottom of the trend line resistance is at $100.96. So that'll be quite a move from here. That's $7 higher than where crude oil currently is. Okay. So with this one for trading for Tuesday, long at 94.15, short at 92.41. I think that the supports are going to hold now, and we're going to begin to retrace now from this point. We did get a warning bar on November the 5th. See the black bar? Okay. We took out the support barely. We're building a nice little support base here. So this should begin to head higher now and correct. I think that's pretty much safe to say, especially if we come off lock on Tuesday. Alright? The last couple of locks have been pretty substantial as far as downside momentum, as you can see within this bear trend. But a correction is in order. We've been coming down just pretty much straight down without really any break. So we should now try to at least correct a little bit before we see if we're going to head lower or not. I still have to go with what I said earlier, that before it's all said and done, we could get back down to the 80s, okay, on the crude oil. We'll just have to watch and see. Another thing to note too is that your trend channel is still in effect. Downtrend channels here, but you see we're kind of flattening out here, which is a sign of forming a base. So we have to wait and see. But that's how we'll play the crude oil for Tuesday. Alright, taking a look now at the gold futures chart. Alright, as you can see, the bear is still in effect, but it's looking like it wants to try to lock back in on the downward momentum within the bear trend. But we do have an uptrend channel, alright, as you can see here, uptrend channel. Looks like price action is going to try to see if it could pick up some momentum, but we're relocking back in on the downside too. So we'll see if the relock fails for Tuesday's trading. If it fails with the trend channel remaining intact, then that should push prices higher and at least get it to the bottom of the Kumo at 1310, with secondary support around 1340, 1350. Alright, and we could actually officially change the trend. We could officially change the trend if we get above this this 1360 level. That would definitely signal the next a change in trend, and that'll be end of the downtrend in the gold. Is it possible? I don't know. We could get one more flush out. We are pretty close around the 1250, 1260 level now. We could test that, take it out, nip it, and then rock it back up from there. So I'll be very careful on this, going into Tuesday. All right, long at 1290.20, short at 1267.30 on the gold for Tuesday. All right, finally ending off in the silver. The silver is doing what I projected with the gold chart just now. As you can see, black bar here on the 13th, signaling that more downside was coming. We got it. We now need to see if we can really pick up some momentum. You see the positive trend channel is starting to like mellow out, top out here. If it does on Tuesday, we could get a cross down and the start of a new downtrend channel, which means that selling pressure should pick up. We are locked in on the bearish momentum, as you can see here. Okay, we're locked in. Here we go here. Again, 1950 should be the target. We should be able to at least nip it before it tries to correct itself. Or what we may end up seeing is this could also, instead of support, it could be the beginning of a major down move, major cycle down. Like we haven't even seen the lows. Like it may crash below this 1950 and just keep on going. I have to say this is a major red alert now in the silver. A major red alert. I do believe that barring some type of news event or something like that, I think we're in for a doozy here. A major down move. I don't think we've seen the bottom just yet. I think momentum may start to pick up here, as all indicators are pointing south. So let me give it to you for Tuesday. I would be very careful, like I said, trading for Tuesday. Long at 2054, short at 2026. And like I said, the ranges have been tight. So you've probably been getting stopped out the last couple of days on both sides, but it's been very, very tiny losses. You have to do that sometimes to catch, to be in the market when the move happens. But I do believe that tomorrow's, trading for Tuesday, you're going to get a negative swing VIX. This little uptrend channel is going to stop and it's going to go down. It's a weak uptrend channel anyway, because we have not taken out any highs. We've not put in any new tops here. Okay, very tiny trading ranges, almost invisible momentum. Yeah, I'll be wary on on this particular market. I'll be shocked if we exploded higher. So that's about it for today. Remember, take what you can and give nothing back.